Okay, so I wanted to give you guys a quick market update before the CPI inflation report. So CPI is going to be reported at 8:30 a.m. Eastern, 1 hour before market opens, and the expected move is about $4.80. Basically what that's saying is the market could be testing all-time highs tomorrow morning, or if it wants to sell off, it could be dropping about 1%. If inflation is super hot, the market could drop a little bit more, maybe 2.5%. If inflation really cools down, we could be breaking out to all-time highs. So that's the S&P 500. A few key stocks that are noteworthy. Tesla. Tesla got crushed today. It was down over 7% at one point, finishing the day down minus 6.34%. If you guys watched the Sunday market update video, I was basically saying, hey, watch out for this descending triangle over here. We've got lower highs and we've got this flat bottom kind of at 380. As long as Tesla's underneath 380, it is bearish. And now we're coming into a minor demand zone. If it turns that into resistance, call it 320, Tesla could see something like 280. So just be mindful of that. I've got a cool put ratio trade where I get paid a bonus if I get assigned on TSLL shares, which is a double levered long on Tesla. Okay, so that's Tesla. Bearish short term, but could stabilize and find some support after a few more days of selling. One time I was talking about uranium, and SMR is my favorite single stock to play uranium. And I was saying that SMR, you could actually wheel it. And that basically just gives you cash flow to agree to buy the shares, and it gives you cash flow on the top end. So SMR, I don't see any too many trade setups on this right now, but if it can hold above this 23 level, I still like the wheel. Okay. Next up is Google. Google still dropping from its earnings report. Basically, Google was a false breakout. We had this flat top. It was looking good, and then they gapped it down after earnings. We had a drop, bear flag, drop. Google's short-term bearish as long as it's really underneath, call it 190. I'm eyeing up that 175 level on Google. Next up is TSM. TSM looks a little bit more bullish to me, having a bit of relative strength today, up 0.38%. If TSM can really break and hold above 210, I do think that it has room. It has thin liquidity up until 221 per share. Longer term, I am still bullish on TSM, but it really needs to stabilize above the $200 per share level. So that's TSM. I was also telling you guys that I'm really bullish on PanW long term. Now, short term, we're kind of coming near some resistance. It could totally drop 4 or 5%, and I do think that that could potentially offer an entry on this stock longer term. I think in the next 3 years or less, I think the stock could potentially get up to $400 per share. PanW looks way more bearish if it breaks underneath $170 per share. Okay, note that PanW does also have earnings on February 13th, and the expected move is pretty wide. So if we take a look at the option chain, PanW expected move is $16. So that's a pretty wide range. Be on the lookout for PanW earnings. Next up is gold. I was saying that gold is really, really strong. It should be being talked about a lot more, hitting all-time highs. If gold could somehow get oversold on the daily or come back to this GLD 255, I like that for an entry point longer term. You could do something like wheel GDX. These are the gold miners. This is the gold miner ETF. So a basket of gold miners. Keep an eye on that trend line. You know, if gold miners could maybe sell off like 4 or 5%, I could be interested in selling cash secured puts at that point in time. Next up is oil. I've been saying that I was watching for a bounce on oil this week. Oil, crude oil, up about 3.7%. But my favorite way of, investing or trading oil, it's more so trading, not investing, is UCO. And so I was telling you guys that I was assigned on my cash secured put at 28 last week. That's perfect because oil gapped up on Monday. I was able to sell the 28.50 covered call. So I'm getting paid to buy the stock, or triple levered ETF in this case. And now I'm getting paid to sell this triple levered ETF. I still like UCO wheel as long as it's holding above 27.30. Okay, so my stance on oil as of right now is neutral/bullish. The CPI report can cause some oil volatility. So it is minorly overbought in the short term. So I wouldn't be surprised if it had a little bit of a pullback. But if it can stabilize that pullback, I might add to my oil position. Okay. Another stock that I was talking about was CELH, Celsius stock. And Celsius, I don't know if this is the bottom, and I don't think it's the bottom, but it could be the bottom. So what do I do in that type of scenario? I do a half size position. So half of my position right here. And then I give it one more chance. I might average down just once, do another 0.5% size. I will completely stop out of Celsius if it breaks 16. But what's nice about the wheel strategy is I'm able to lower my average cost each and every week. And as long as it doesn't just go straight down, I can eke out a profit. So I win if it goes sideways. I do okay if it goes sideways to slightly lower. I win if it goes sideways to slightly higher. And I get my max profit if Celsius can rally. The fair value on Celsius is about $32 per share. So I think it's enough of a discount at this price. Also, I'm noticing some sector participation. If you take a look at Coke, up 4.73% today on earnings. That's a really nice move, and that's a breakout. And Celsius is starting to take a decent amount of market share in the beverage industry. And so I'm thinking if there's going to be a sympathy move, Celsius might be able to get a little bit of relative strength. The whole thesis behind the Celsius trade is it's undervalued. It could be setting up a buy. I don't see any major bullish divergences just yet. We could go to like the hourly time frame. You could maybe see some money flow index bullish divergence where the money flow is making steeper higher lows, but price is kind of maintaining the same price. So that's something to consider. But I really like the premiums and the implied volatility on Celsius. Next up is Bitcoin. Bitcoin just stuck in its range. This is going to be a big breakout whether Bitcoin breaks up or breaks down. The last time I broke down Bitcoin, it was at about 100K, and I was saying, probably goes sideways to slightly lower. And that's exactly what sideways to slightly lower looks like. So Bitcoin kind of shimmying on lower. If Bitcoin really breaks underneath 90,000, it could take a straight shot down to like 72K. Okay. If Bitcoin can really break above and hold above, call it like 107,000, that would be bullish. And Bitcoin could have a range expansion to the upside. So be mindful of that. I also noted that MSTZ wheel can be a great way to potentially hedge Bitcoin. MSTZ up 8.63% today. So this is a big move. And you can see that this goes up when MicroStrategy goes down. And I guess you could call it strategy, but MSTR really starting to see that downside action. And this may just be getting started. You know, take a look at this chart. It's still coiling in this range. Take a look at Tesla. Is Tesla foreshadowing what might happen to MSTR? It's really interesting how Tesla, intensifies its sell-off as it's dropping. Maybe Elon Musk is, spreading himself too thin, working with the administration. It's just something to think about. But Bitcoin, crypto, I'm just holding back on it. I trimmed just a little bit of my Bitcoin today, and I'm okay with buying it at higher prices. So if you're uncertain about a stock or a trade, it's okay to get out, get into cash, and you can always buy it back for the same price, sometimes lower, sometimes higher. You don't always have to have a position, and sometimes cash is a position. Lastly, ASTS. This is a volatile space stock. Look at this breakdown and then jab back up. So this could be a potential breakout, a descending triangle breakout up. I do like the bullish volume. There's also bullish options activity. So if you are willing to potentially wheel this, I think that you could potentially, sell like the 28 strike cash secured put, get assigned, sell cover calls at 28 or higher. You do have to stomach some volatility, but on a squeeze, if ASTS really breaks above 33, it might have a straight shot up to 39 and maybe even a breakout to 40 or higher. That's a bit speculative. This is a risky stock. A better support area might be something like 24, but just keep an eye on that. Lastly, I'm hosting a free training with Brian and Carter. If you guys want to see that, you can just sign up first, link in the description. We're going to talk about options income. We're going to talk about the safest way to day trade. Day trading has a high failure rate, and you want to find the safest way to do that. And then I'm also going to show and give examples on how mentors can really help you in your trading journey. You don't want to go at this alone. I am a professional market technician. I'm a CMT Charter Holder. So I'm a licensed professional when it comes to forecasting stock prices, asset allocation, intermarket analysis. And I want to share with you guys everything that I've learned. And I've made a lot of mistakes in the past, and I want you to sidestep those mistakes. And then I just want to get you guys to the meat and potatoes when it comes to trading and investing. So sign up for that link down below. Comment down below what your thoughts are on any of the charts or stocks that I talked about. See you guys for CPI tomorrow morning. I'll be trading live with Victory Trades. Peace out.